Hello, this is Dan O'Brien, Extension Ag Economist at Kansas State University. I'd like to talk about some very recent trends in Kansas wheat prices and broader prices for wheat in that market overall. Some key points concerning U.S. wheat markets. First, U.S. grain markets are impacted by broader U.S. economic outlook and trends. And the U.S. Federal Reserve actions to lower interest rates lead to a lower U.S. dollar, which all things else considered, all things else held equal, would increase U.S. wheat export competitiveness. We'll see in coming weeks just how that plays out. There is discussion of U.S. wheat export purchases from China. Again, we'll have to wait for verification. But we do see the coronavirus having some impact on other wheat exporting countries. There's the stoppage that's happened in Argentina. You hear of other countries concerned now about protecting their domestic wheat supplies. Some discussions out of Ukraine, the Black Sea region about this, other places in the world. So really an unexpected issue that's been positive in the market. And probably the key unexpected issue is a strong U.S. Domestic demand for wheat flours provided support for wheat prices. Probably after toilet paper and hamburger, I suppose, response to the coronavirus has made consumers zealous in their pursuit of bread in grocery stores. So that's been a direct demand jump for domestic millers. So I want to show you a little bit in terms of of where prices are at. You can see that when you look at the price trend here of late for wheat futures, compare that to eastern and central Kansas terminal and local elevator prices. We now almost have the local cash prices even with the futures. And in the past we were close, but now it's going in lockstep. So that's a real sign of domestic strength and demand. I would also say, when we last put out one of these on wheat, we were looking at, it was on March the 15th, 16th, thereabouts. And man, things were looking rough in terms of cash prices diving off to the place where we were hoping in eastern and central Kansas, we'd still be covering direct costs, much less all costs at about $4.99. Well, since then, top prices have rebounded on this recent strength, and we're moving towards covering full cost for wheat in central Kansas. And of course, cash prices in Southwest will basically have transportation differential. You look at that, we've seen the same proportional rebound out there as well. Prices at $4.50 again to cover direct costs for a Southwest non-irrigated enterprise. We're at about $3.88 thereabouts. Well, and we had fallen below that in the midst of the fears that were hitting the markets. Well, now we've rebounded up to as strong as we were right after the first of the year. The thing you'll notice is that that the prices on the low side and the terminals, they've also responded pretty strongly. So there you go. When you look at where we're at in the markets, the wheat market has recovered in a way that would not have been expected but 3 or 4 or 5 days ago. So for that, we've had a complete turnaround in the wheat market, and we'll keep watching where prospects go, and we're probably getting at the place where we have some pricing opportunities for people to consider. Thank you very much. This is Dan O'Brien, Extension Agricultural Economist at Kansas State University.